Welcome back to another episode of the Anatomy of the Trade. Today is September 3rd and very interesting development in the market. So we're just going to do the market update, but also we will be talking about tactics. Tactics as to what to do when we are in the climactic run and something like today, a big reversal day could potentially take place. So with that, let's go really quickly to our charts. Sorry for this. Let's just go to the daily first. And Franz, let's just give our opinion what is going on today.
Roman, this is what you've been talking about for quite some time that we want to be on alert for. It's a big change of behavior, right?
Mm-hmm. And why would we even say that this is a change of behavior?
We've got a couple of things happening. We've got a big reversal. We're seeing we're seeing price move down more than it has at any in any prior time through the whole, basically since early June. So that's a change of behavior. We're seeing volume at the middle of the day already at substantially high levels, and I think we're probably going to see it get a lot higher as the day progresses. We're seeing a break of some channel lines there and some trend lines. What else do you see?
Yeah, so all of those signs, so first we're being in the overbought condition, and we could, think about this in a different way. So obviously yesterday in the class we were talking that we still have a little bit of room to go up. And, could this be maybe even preliminary supply, like the initial first point of selling and the price could just, kind of like still go up? Maybe, we don't know, and we don't want to predict, we just want to follow the market. But what's significant, and what Franz did mention, is that being in the overbought condition in general, we have a climactic run that usually is going to conclude with the stop in action and with some kind of reversal. That reversal has to happen as close being lower than the low of the last commitment to the upside bar. So we see that it's happening right now on the intraday close to 9 a.m. Pacific time. And I wonder if we're going to have some kind of intraday rally here and we're going to still close weaker. And this is the next level that I would be watching very, very closely today. Will we close below this level? Because if we do, then this is going to be a much more profound weakness, something reminiscent of what we've had here at the beginning of June, where there was just a cascade of institutional selling. And look at the volume signature. So I would be expecting that today's volume signature is going to be close to that. And either close to that or maybe even slightly more. We're already at such a high level here at 9 a.m. Pacific. What's useful to do here, obviously, just to look at all of the sectors, at all of the markets, and specifically looking at NASDAQ. And obviously NASDAQ has been in the extreme overbought condition, so we see that overthrow, overbought condition from this channel. This was the final acceleration right here, and look at this big bar. So something very significant, and this bar actually on NASDAQ is the largest downward bar that we have seen on the way up since March 23rd low. So I think that as a leader, as leader exhibits such characteristics of the reversal, then it's quite significant. And then again, looking at the volume signature here, we're close to this bar. right here in terms of the volume signature. We're definitely going to overcome, all of these bars. So it's only probably these two right here that I would be, maybe this one, this two as well. I would be thinking, would we overcome them? And it seems to me that we're probably on the way there. And as supply increases, as selling increases, what does the price do? Result to the downside increases as well. So this is that synchronicity that we study in the Wyckoff Trading course, and it just tells us that with the effort to the downside, the price actually does follow it. So there's a considerable profit taken at this point of time. Well, Franz, I guess the next question for us is if there is some profit taken, what kind of structural scenarios could we expect here? What are your thoughts on that?
Putting me on the spot here, because this is where I really enjoy watching your different scenarios that can play out. But it's great to think about what are the possible scenarios that could occur. Do we have a change from a bullish bias to a bearish bias? I guess that's the first outcome that we could consider. And what would that look like? I think we would see, an attempt to recover this upper trend channel line, a quick failure, additional high levels of supply coming in, and then a drop probably all the way back to the demand line, and would happen quickly, and then some sort of attempt to even penetrate that as a sign of weakness that would then play out, probably see some value buyers come in, and then a weak recovery, and then down further. That would be the most bearish potential outcome, I would think. So that's kind of number one. Another possibility would be that this is similar to other situations that we've had during this uptrend, where we get a quick blast of supply coming in that is exhausted rapidly, and then demand takes back over, and we get that kind of quick rebound, and then off a couple tests, a trading range develops that eventually resolves to the upside. Those are kind of the two most obvious scenarios to me. What do you? I'm sure you've got other ideas.
I definitely like both of them. So would we have more of the weakness? So would we go from bullish to a bearish scenario? And by bearish, obviously, we would be thinking short-term bearish, not necessarily like a downtrend developing. We don't have a lot of causality, for this downtrend, unless we're going to be just like aggressively selling on the way down, like we did with COVID reaction, the beginning of the COVID reaction. So we'll have to be on the lookout for that. I like, the idea that could there be some, bullish scenario here as well? Yes. It seems that supply is a little bit more than anything what we've seen before in this uptrend. So I also would consider that we could have something in between. We could have a short-term reaction. We could have a short-term change of behavior that could basically say that we are done with the uptrend, and from the bullish environment, we're going into the consolidating environment. So probably still would be a touch of the support, and then the development of the trading range somewhere at this level into election. Because election is just now at this point, at least to me, feels like such a binary event. Who's going to be the next president? Also, just thinking about this scenario, I think this area is extremely important because we stayed here for quite some time. We stayed here more than a month and a half. So any type of support that we have here as a cluster we should consider. So probably just uh, showing that change of behavior, suggesting a trading range, that's scenario number three. So in all three could develop. One of the things, one of the reasons why we do this in the classroom, developing different type of scenarios, it's to get our minds in line with one of the scenarios that actually become, a reality. If our minds understand that anything is possible in the market and we just follow in the market the way how it develops, then we could understand what kind of tactics we could apply to current situation. And speaking of tactics, Franz, we definitely need to consider what would we do in this type of the situation. We actually, if we're thinking that we are done with the up move, and we still have to see what kind of close we're gonna have today. But let's just say we close like this. This is a reversal, and it reverses in the overbought condition in the PNF zone after the climactic run. So it's a significant reversal. Um, if it closes like this, what do we do? What do we do with our portfolios? What do we do with our individual positions? And what do we do, to avoid any type of significant damage to our unrealized gains? And here's kind of like that tactical game plan. And I just want to stress right away that this is not a recommendation or advice. Please take this seriously. These are just some thoughts, conversational thoughts that we have together with Franz as we go through the analysis of this market. So as I mentioned, we are looking for the tactical game plan when we are in the overbought position, when we are in our target zones. So all of the targets that we have are somewhere here in this area. The latest trading range also showing this area right here. We are in the climactic run, so there is some acceleration into the overbought condition. And we just produced a meaningful reversal, again, dependent on the close. So what could we do? Couple of thoughts here, a couple of ideas. We could definitely decrease the size of our current positions. We could do this through tightening of the stop losses or through just some market orders where we're just saying, okay, I'm going to go through the whole portfolio and I'm going to just decrease the current size, by a factor of like 1/3 or 1/2. I could be selective with that as well. I could allow the stop losses to take me out. But because we're in the climactic run, my stop losses are going to be somewhat tighter. And, even on the intraday basis, some of those positions might be either closed or scaled out. Closing some of your positions completely is also a good idea in this type of the environment, especially if you're looking at some of the weaker holdings, or you just taking the profit in general. So you're just kind of like saying that I've seen, three waves, and all of them had those characteristics that we study in the Wyckoff trading course, and we are in the climactic run here. So even if I take profits in general and I'm out of, let's say, half or the majority of my positions, and you've been holding those positions for quite some time, you probably, doing a good thing to the portfolio and just saving a lot of unrealized gains. Another way of thinking about tactics here is just hedging your positions. You can hedge your positions through option strategies, or you could pick up some related to the industry group stocks that are weaker if you're holding the stronger stocks, and just short the weaker stocks and just hold on to your strong winners. So that's a possibility as well. Um, Probably options would be my preference here. And then you could also hedge through the market itself, and options or inverse ETFs would be something, to think about here. Franz, obviously, this is not necessarily all of the tactical decisions that we could make at this spot. But what would be your personal preferred strategy here at this point of time?
Well, and I think the first question that uh, really applies to all of these different possibilities is what is our kind of approach to the market? Are we real short-term traders? Are we intermediate swing traders, or are we, long-term traders? And I think depending on what we are as traders is also going to have a big effect on how we approach this sort of thing. Obviously, the more short-term oriented we are, the more sensitive we're going to be to what we see happening here. The longer-term investor might just, elect to ride it out because that's what we've been doing for, possibly decades. Who knows? So that would be my first reflection. I think another thing that comes to mind is that it's never all or none. We're never going to be completely out. It's just simply, I think there was an old story about J.P. Morgan was approached by one of his young associates who had a pretty big position in the market, and he said, "Mr. Morgan, I just can't sleep at night with this volatility. What should I do?" And Morgan said, "Well, sell down to the sleeping level." So it's whatever individual risk tolerance an individual has is also going to be factored into this, because we are seeing a change in behavior, and we're going to be entering a different kind of market environment most likely for some period of time, and it's not going to just be this wonderful climactic move that we've had for most of August where it's just up and away.
That's actually both a very, very good point, Franz. Coming back to the time frame, yeah, definitely different traders that use different time frames are going to act and behave differently. So obviously short-term traders are already in this position to the downside, and they are just intraday trading this move, and they're enjoying those quick profits because there is a lot of quick profit taken from institutions that are taking place. The long-term investors, obviously, this is, the hedge strategies that we are discussing here is probably more for the long-term investor type traders, just because there are still quite a few positions in your portfolio that are, not only significantly profitable, but they have some higher objectives. They have some kind of secular look, where they're coming out of the huge formations. So, and that means that they're have big causality that should resolve in the more cyclical type of moves. And you have to go through those type of the corrections. But as you go through those, you always have, your options as to how do you manage your position. Do you decrease the size? Do you put on the hedge? And if you're hedging, how do you hedge, and so on and so forth. And I think today's bar is kind of like that day where we are discussing, we should definitely discuss this. And then the second thought that Franz had is, if you feel that volatility is so high, and volatility of your portfolio to the upside and to the downside, then definitely, that was it JP Morgan, right?
Mm-hmm.
JP Morgan's advice of decreasing the size to the comfortable sleeping level. I really like that as a definition. We should be grateful, to JP for such a great recommendation. So yeah, taking profits again at this point, if you've been actively trading all this time since March 23rd, meaning that You've been creating your portfolio since then, and it's quite sizable, and you're maybe like 90% exposed to stocks, and you have maybe like a little bit of cash, just to hedge. Then I would definitely don't be shy, would not be shy to take some profits at this point, just because of this whole uh, meaningful run that we have had in the last, number of months. All right. Well, Franz, what are some of your concluding thoughts here?
Well, my concluding thoughts, I think, um, from my standpoint, um, this change of behavior is something that we've been anticipating for quite some time. Um, it's going to be something definitely that we're going to enjoy watching to see how it plays out. Um, and my opinion is that, like you said, it's not, I don't think it's a terminal to the whole secular move kind of event that's occurring here, but it's definitely uh, probably going to lead to some sort of change in character for the market where we're not, in this wonderful climactic move that we've had for the last month.
Right. Yeah. So let's just see how it's going to unfold. I think that the intraday picture is going to be very interesting to see how that's going to develop. What kind of reaction we're going to have here. Is it going to be more meaningful? Are we going to go to the support levels? And then just judging the reaction, judging the character of the reaction is going to be extremely important going into the end of the week and at the beginning of the next week. And then just thinking a little bit more of the intermediate picture. Obviously, November election is on the horizon. We are, 2 months away from it. So therefore, there's going to be some uncertainty, and that uncertainty is going to be reflected in the price structure. Well, with that, guys, thank you for watching this episode. Hopefully, this was useful and valuable. And as always, until next week, thank you, Franz.
Thank you, Roman.